Hello, viewers. You're welcome to this episode. My name is Sunday, the host. Uh, if you are new in this channel or if you're coming across my video for the very first time, please subscribe. And if you've been watching my videos and you've not subscribed to our channel, please do subscribe, okay? And if you have any comment, leave it at the comment section. Apart from that, if you are having challenges with a particular strategy or a topic, please drop it at the comment section. Write and tell me, please teach on this. I will gladly do it. I know how we explain things. We take it very slowly and step by step. Okay. Now, our website is launchagainstfx.com. Go there, all right? Choose a package for yourself so that we can train you. All you need to do is contact us. Within 24 hours, we will respond to you. And apart from that, there are so much materials, all right, that you can use for the meantime to educate yourself so that you can know what Forex is all about and you can begin to learn why you book for your mentorship. All right. The last video, there was something that I skipped. I said, let me just quickly bring it on. All right. So that we understand it. The last video I did say that you create an account, maybe MetaTrader 5 or TradingView. All right. After that, you choose your broker, you register with them. Then you now, the part that I forgot to touch on is linking your broker to your preferred one that you choose. If it is TradingView, like the one I'm using right now, you link your broker to it. All right. If it is MetaTrader 5, you need to link your broker to it. It's a very simple process. You do it, and that's all. You are set to go. You now have a platform where you can practice and follow suit. All right, today, how to become a successful forex trader, chapter 9. Guys, we are gradually going deeper. Like I promised us this week, we are going to step up the game, guys. So, right now, grab your paper, your pen, and a cup of coffee. Then you just sit down and listen to what I have to dish out tonight. All right, how to become a successful forex trader, chapter 9. Now, the topic of today is what I titled Market Structure. All right, market structure. Now that you have a graphic user interface like this, you don't know what to do. I already told us the players in the market. We have the buyers and we have the sellers. All right. We have what we call the speculators. We have the hedge funds and all that. We have the hedgers and we have the speculators. All those ones are a little advanced. But what you need to know right now as a beginner, all right, or even if you are a little advanced, you should have it in mind that the players in the market, they are buyers and they are sellers. All right. The sellers take products to the market to sell. Buyers come to the market to buy that product. Without buyer, sellers are nothing, and without sellers, buyers are nothing. So what happens in the forex market is between the buyers and the seller. Whoever comes to the market is either you are buying or you are selling. So just those are the two things you must have at the back of your mind. So today I will be treating this topic called market structure. All right, market structure. All right, so please listen to me, because without market structure, if you don't understand market structure, you will always be making mistakes as to where you want to enter or the point of entry, where you place your stop loss, and where you need to exit. I mentioned three things right now. If you don't understand market structure, this is what will happen to you. Now, there is a place we call entry point. All right. Another one is what stop loss, stop loss point, and we have also what we call your target, or you call it take profit point. All right, you can call it target point, you can call it take profit. So it's the same thing. We usually say TP, that is take profit. All right. So you need to understand market structure for you to be able to know where to place all these things. All these are commands that you give to your broker, telling your broker you want to enter the market right now. And when price gets to this stop loss, take me out. That means my analysis is wrong. Once price rise and get to this take profit point, I want to sell. You've been buying. Once you get to this point, I want to take my profit. As you are taking profit, meaning you are selling, I will explain better. So right now, what is what? What is market structure? Overall framework of price movement in the market. That is market structure. Is what? Overall framework of the price movement in the markets. This is what we call market structure. Is the overall the overall framework of the price movement in the market. Like I told us, is very, very broad. I'm going to be taking it gradually until we completely dealt with it. But guys, you should understand that market structure is the foundation. It's just like when you want to set up a building or a project, you have to lay your foundation. And it is that foundation from the onset that will determine the height of that building. So in forex market, we have market structure. That is the foundation. All right. So, like I said, market structure is the overall framework of the price movement in the market. What do I mean by that? This is a chart right now, and this is a structure. You are just seeing candlesticks, but this is a structure. At every point in time, I know what the price is saying. I know what the market structure is giving me. I know what is happening. But as a beginner, or if you are a little advanced and you are not that, you are still struggling, you will be very, very confused once you open your chart. All right. So I want to give you a very simple way for you to understand a market structure. A market structure simply means what the activities between sellers and buyers. Their activities is what is being represented here. The activities is what is being represented here. What is going on between seller and buyers? That is what is represented here. All right. Now, when we say market structure, we are simply saying price goes as a bullish. We have a bullish and we have a bearish market. All right. Now, when we get to type of market, I will explain that. Price is coming like this, pull back, break structure up, pull back, break structure up. All right. Now, when something is like this, another one is this, push to the downside, pull back, or you can say retracement, break structure down, pull back, break structure down. Let's end it here. Now, when something is like this, we simply say this is an what? An uptrend. We say uptrend. And this one here, we'll simply say is a downtrend. But this altogether is a structure, is the structure of the market. As the market moves, it gives structure. As this market is going down, it's building a structure. All right, is building a structure. And what happens here is that if there's a push to the upside, it creates a swing high. Then when it pulls back, it retraces. When it takes another move again from here now, when it takes another push again to the upside, we say break of structure. We denote it with BOS, break of structure. When a market moves like this, you don't need to enter yet. By the time it's retracing, once it's done retracing, or once the market is done with its retracement or pullback, then you can now take position when you see a sign that the price wants to continue to rise so that it can break this structure. At this point, it has created a structure high, it retraces a little, then it will now gather a momentum to break the structure high. What happens is that price rise from here to, like, for example, $50. All right. Now, there was a retracement that now brought the price back to $3.50. Then the price will now take off again and rise again to $8.50. Once it get to this point, all right, it will retrace again. That is moment of cool off. The market will go down to $6.20. Then it will gather a momentum again. The market will rise or price will rise again to $10.30. It continues like that. Once you get to this point again, we'll say break of structure. Guys, I did told us that now we'll be going deep and more advanced. Please bear with me. It's a very simple thing. If you follow suit, it's a very simple thing. So price will go rise, retrace, take price up, bring price down, take price up. But when it now gets to a level, it will now change. All this why we will say that this is a bull market. Buyers are in control. They kept on pushing price up, even though sellers tried to push the price to reduce the price. What does that mean? Buyers are more in the market. When the buyers are more than the sellers, the price will rise. When sellers are more than the buyers, price will go down. Now, this one now, price started from here. It pushed the market to the downside. All right. Now, there was a little retracement. Price from 50 cents to $2 to $5.20. Then it now retraced a little, a moment of cool off to $3.10. It broke structure down again. Then at this point, we say break of structure. Did you guys get me? From this fifth, from let me start again. From $15, let's say from $15 10 cent, price came down, all right, to to $13.10. Then it rise again to $14.10. It broke structure and it rise again, and it broke structure and price went down again. All right, price went down again. All right, price went down again to $7.50. It rise again to $10.10. It went down again to $6.10. All right. By the time it breaks to this point again, we'll say break of structure. All right. We denote it with this BOS, break of structure. You can understand as price is going up, it takes price high, it retrace a little by cooling off, it reduce the price high, it reduce the price, then high. But by the time it gets to a point of reversal, all right, the bear, that is the sellers, will take over. They will push the market, the price down, it will rise again, push the price down, it will rise again, then push the price down. We'll say the market is bearish. All right. We'll now say the market is bearish at this point. All right. So these are, at this point, I'm going to stop here. Take this one, consume it, go through it again, subscribe to my channel.